All right, Zynga's finally filed for its $1 billion IPO. For more on the significance of this announcement, which we just got literally within the hour, we're going to go to Paul Bard, an IPO analyst at Renaissance Capital. He joins us on the phone from Greenwich, Connecticut. Paul, give us some perspective here. How big is this?
Yeah, well, I guess the first thing I'd say is the cat's out of the bag. We've been waiting to hear about this. We finally got some details. Zynga's really one of a handful of high-profile internet companies that play into this new social media phenomenon. And this one is directly tied to Facebook, so we expect just a tremendous interest in this deal.
Could Zynga be Zynga without Facebook?
Unfortunately, that's also, it's a double-edged sword. So, and that's one of the biggest criticisms. But right now, Facebook is not a bad partner to have. I think the relationship is quite symbiotic between the two at the moment. And if you just look at the numbers for Zynga, as you mentioned, $1 billion. I think potentially it could be even higher in terms of the amount of money they raise. And this wave of internet IPOs that we're seeing, it's just unprecedented. And from Zynga's perspective specifically, the numbers they have, that they generated over $800 million in a bookings number, which is actually how much cash is coming in, and almost $400 million or more than in cash flow. So we're really talking some big numbers here.
Now, I'm a little confused because if they've got 800 in bookings, and yet we're talking about $1 billion valuation, I mean, it sounds like that's about 1.3 or 1.4 times sales or bookings. I mean, that actually sounds incredibly cheap relative to some of these other IPOs we've been talking about. Can you give us a sense for valuation?
Sure. Well, let me clarify that. The $1 billion is how much they plan to raise in the offering. So the valuation, and right now they haven't set a price range or price terms yet, but, you can, back into it and think that it's quite possible it could be a $10+ billion company, which for a company that wasn't even in existence less than 4 years ago, that's quite phenomenal.
In other words, they're only going to float 10% of the company, $1 billion worth of stock, but $9 billion will still be privately held.
Right. That's probably a good metric to use. And like I said, I mean, the $10 billion, and you look at the amount of cash flow this company has generated, which in last year was over $250 million in free cash flow and growing. The company could potentially double its business this year. So, when you look at those numbers, at first you might $10 billion. It's an eye-popping number, but this is a company that has the cash flow and the earnings, at least at the moment, to support that type of valuation.
All right, Paul, we've only got about 10 seconds left here. Would you be a buyer of this thing?
It all comes down to price, but I'll tell you, it will be a hot IPO.
Yeah, hot IPO. We've certainly seen plenty of that. Well, Paul Bard, thank you for joining us, analyst at Renaissance Capital.